Hey everybody, let's talk about Dollarama stock. So Dollarama recently reported earnings, and I'll go over how it did and whether this is a stock worth investing in. So I'll start with the actual earnings report. So December 13th, 2023, reported fiscal 2024 Q3 numbers. So one of the things that stuck out to me was comparable store sales, up 11%, which is really strong because comparable store sales, you're just looking at the same stores that were open in the previous year. It doesn't factor in new store openings, and once you factor in that, the company's total sales are up 14.6% to just under $1.48 billion. So really strong growth, especially comparable store sales, because normally when you're looking at retailers, single digits is normal. A lot of companies would be happy with 5%, 4% in a typical year. But this is obviously not a really typical year. And so Dollarama is getting a lot more traction just because people are battling with inflation, higher prices, and so people are shopping more at Dollarama at the dollar stores. But also, what's really strong is their earnings numbers, up 31%, 0.92 EPS. And let's compare this to the previous year, fiscal 2023. So if we go back a year, fiscal 2023, again, third quarter, December 22, so same period, still had 10.8% comparable store sales growth. So that's, again, really strong. And overall sales grew by 14.9%. So again, around 15% overall growth. And, if we look at diluted EPS, also up around 15%. So again, a strong year last year as well in the third quarter. Now, it looks a little bit different once we go 1 year back to 2021. So if we go back to 2021, so fiscal 2022 Q3, so December 2021, sales only increased by 5.5%, and what's really shocking is comparable store sales were up by just 0.8%. So the big difference is interest rate increases didn't happen until March of 2022. So for the period ending October 2021, the economy was still in good shape. People were spending a lot and spending on discretionary things, so their budgets were still okay. Still spending a lot at other stores, buying things, not at Dollarama because they didn't need to. They didn't need to shop at Dollarama. So comparable store sales were only 0.8%. So that tells you a lot about the shift in spending. As people have had to tighten up on their budgets, on their spending, there's been a lot more traffic at Dollarama. But that being said, even in fiscal 2022 Q3, net earnings were still up 17.3%. So they still had good profit growth. So it wasn't that it was just that it was just a bad year, that this is a stock that does badly if the economy's in good shape. It was still doing fairly well. Their earnings were up. They've had earnings growth, last year 14.8%. Obviously this year 31%. So really strong numbers from Dollarama, but obviously doing a whole lot better now that people are more price conscious and looking for ways to make the most of their money, stretch their dollar as much as they can. So Dollarama's been doing really well in that sense, and so it's potentially a good buy, especially if you're worried about a continued slowdown next year, or that things may not improve quickly, which may very likely be the case. There's still a chance that there could be a recession, and the Dollarama could still be benefiting from stronger demand than usual. So it's a really good play if you're concerned about the state of the economy next year. But there's another reason why I like the stock, and that's because with Dollarama they've increased their prices, so they're no longer offering there's no longer just $1 or $2 items. I mean, you can find things that are priced at $4, $5, and it's not as simple as they're just hiking up things and just raking in more of a margin. But by having a higher price point, they're actually able to offer more things, better things, right? Things that you may not be able to find at Walmart and things like that. There's all sorts of sites on Reddit, Instagram, all those places of things that people can find at the Dollarama stores. So this is just an example. This is one Instagram account that tracks deals at Dollarama, things that you might not find. Like they have decent quality books and things like that. A lot of seasonal stuff that's really popular. So there's a lot of reasons for people to still go to their local Dollarama. It's not just junk that they're loading up on. This is stuff that you could find at another store, whether it's a Walmart or wherever else. It's comparable stuff that you can find, and by having a higher price point, they can offer more variety. So it's an interesting play in that sense, just because this is evolving into a larger retail stock than just being simply a dollar store where you just buy some minor things. I mean, you can do a fair bit of shopping at a local Dollarama. And now, as far as the stock goes, so let's look at year to date. So this year hasn't been a bad one for the company by any stretch. If you look at year to date, it's gone from around $80 or close to $80 to now it's recently dipped down to 92, but recently it was up as high as $100. So it's been having a pretty good, strong year. This gray line, this is the 50-day moving average. This one is the 200-day. So you can see it's been well above that 200-day mark for a long time. So it's a really good bullish indicator, a really strong trend that the stock has been on this year. So overall, it's been doing really well this year. If we look at its stats, its main numbers, we look at PE ratio of 28. That's a little bit high, but given that the company's generating fairly good growth at over 10%, it's doing better than your average retailer. It's not too bad. Forward PE 22. That's fairly decent, just because this looks at how much how its earnings will be a year from now. So it takes into account analyst expectations, and at a multiple of 22, that's not too bad. It's a pretty good value as far as its earnings go. Price to sales at 5, so not a bad valuation. Obviously, price to book is the one blemish, looks inflated at 84, but overall its metrics look pretty good. And again, solid profit margin, good operating margin. Business is generating good growth. So there's a lot of good things about Dollarama stock. It does offer a dividend, but it's really minor. It's not a main reason you would invest in the stock. I mean, 0.29%. That's pretty minor, but for investors, it's still a good value, especially now that it's recently dipped. So it dipped following the release of its earnings, so maybe people were expecting slightly higher numbers. I mean, the thing with Wall Street is, a slight miss can be enough to send a stock down, or guidance may not be that strong, but overall it still is doing well, and there's reason to believe that in 2024 it's still going to be doing well, just because the economy's still has a long way to go to recover. It's still a bit on shaky ground. People are facing renewals on mortgages, and so their costs are still going to be going up. So there still could be a good need there'll still be a lot of demand for going to Dollarama stores and for the company to do well. So I think, as well as it's done this year, I think it could still be a good buy heading into 2024. So even though the stock's down on earnings, I think it's doing really well. A lot of good positives from the company that it reported, and overall it looks to be in pretty good shape. So let's just see if they have any guidance here. So fiscal 2024, and still has comparable store sales guidance 11 to 12%. So really good numbers overall. They actually increased their guidance. So not quite sure why the stock would be down given the strong results, but nonetheless, it's a potential buying opportunity, just because solid fundamentals, not a terribly high valuation. So I think Dollarama is a pretty good stock to buy right now.